It is important to recognize that Bitcoin comes with certain risks. There is a chance that governments may attempt to prohibit the use of Bitcoin. China, for example, has banned financial institutions from dealing in cryptocurrencies and has shut down several cryptocurrency exchanges. However, it is worth noting that despite these restrictions, individuals in these countries have still been able to access and use cryptocurrencies. Furthermore, it is important to recognize that Bitcoin is a decentralized currency, and it can be difficult for governments to fully control or prohibit its use. The very nature of Bitcoin makes it resistant to censorship and confiscation. This is because Bitcoin operates on a decentralized network of computers that is maintained by a network of users, rather than a central authority. This means that even if a government were to attempt to prohibit the use of Bitcoin, it may still be possible for individuals to access and use it. Another risk associated with Bitcoin is the potential for price volatility. Keep watching to see the pros of Bitcoin. While Bitcoin is secured by cryptography and is generally considered to be secure, there have been instances of exchanges and wallets being hacked, but none has hacked the blockchain. Investors should be aware of the risks associated with storing Bitcoin in online wallets or exchanges, not your keys, not your coins. Bitcoin has emerged as one of the best options for individuals to hedge against inflation, and here's why. Bitcoin is a decentralized currency that is not subject to the control of any government or central authority. This means that it is not subject to the same inflationary pressures that traditional fiat currencies are. Governments can print money at will, leading to an increase in the money supply and ultimately, inflation. Bitcoin, on the other hand, has a finite supply of 21 million coins that can be mined. This scarcity means that it is not subject to the same inflationary pressures as fiat currencies. Unlike traditional currencies, which are often subject to inflation as governments print more money, the supply of Bitcoin is fixed and cannot be increased beyond the 21 million limit. This limit is enforced by the code that governs the Bitcoin network, and is a fundamental part of the cryptocurrency's design. In fact, increasing the supply of Bitcoin is not a possible thing without changing the code that underpins the cryptocurrency. The 21 million limit is a hard cap, and it cannot be changed without a significant change to the Bitcoin network. This means that the creation of new Bitcoins is governed by a strict set of rules, and any changes to those rules would require a significant change to the Bitcoin network. At present, the creation of new Bitcoins is primarily done through a process known as mining. In simple terms, mining involves using computer power to solve complex mathematical equations, and miners who successfully solve these equations are rewarded with new Bitcoins. However, the amount of new Bitcoins that can be created through mining is limited, and this limit is governed by the Bitcoin code. Increasing the supply of Bitcoin would require a change to this code, which would need to be agreed upon by the network of nodes that support the cryptocurrency. Nodes are essentially computers that run the Bitcoin software and help to validate transactions on the network. Changing the code of Bitcoin would require the consensus of these nodes, which is a complex process that can take time and effort to achieve. Furthermore, increasing the value of Bitcoin is not something that can be done by nodes or miners directly. Increasing the supply of Bitcoin or the value of the cryptocurrency are not possible without making significant changes to the underlying code and without the support of the network of nodes that run the software. While nodes and miners play an important role in the operation of the Bitcoin network, they do not have direct control over the key features that make the cryptocurrency unique. This fixed supply is one of the key features that makes Bitcoin a potentially attractive hedge against inflation. Unlike traditional currencies, whose supply can be increased at will by central banks, the supply of Bitcoin is limited and cannot be inflated. This means that, in theory, the value of Bitcoin should remain relatively stable over time, and should not be subject to the same kind of inflationary pressures as traditional currencies. Nonetheless, the fact that the supply of Bitcoin is fixed and cannot be increased beyond the 21 million limit is an important feature of the cryptocurrency, and one that sets it apart from traditional currencies. Bitcoin has a deflationary monetary policy, meaning that its supply decreases over time. This is because every 4 years, the number of Bitcoins that can be mined is halved. This is called the halving event and is designed to ensure that the supply of Bitcoin is limited. The next halving event is expected to occur in 2024, which will reduce the number of Bitcoins that can be mined from 6.25 to 3.125 per block. This deflationary monetary policy makes Bitcoin an attractive inflation hedge. Bitcoin as a store of value. It is digital gold that can be stored and transferred easily, quickly, and securely. Bitcoin has already proven its value as a store of value, with its price increasing from less than a cent in 2009 to over $60,000 in 2021. This growth has been driven by increasing adoption and demand for Bitcoin, as well as its scarcity and limited supply. Bitcoin is a borderless currency. It can be sent anywhere in the world instantly and with minimal fees. For example, individuals in countries experiencing hyperinflation, such as Venezuela, Argentina or Zimbabwe, have turned to Bitcoin as a way to protect their assets. Bitcoin is a censorship-resistant currency. It cannot be confiscated or frozen by governments or financial institutions. Bitcoin transactions are also pseudonymous, meaning that they do not reveal the identity of the sender or receiver, providing an additional layer of privacy and security. Bitcoin is becoming more widely accepted as a means of payment. This increased adoption and use of Bitcoin as a means of payment are likely to further increase its value and make it an even more attractive inflation hedge. Bitcoin is often described as deflationary because its supply is limited to 21 million coins. This means that as demand for Bitcoin grows, its price is likely to increase, which can create a deflationary effect. However, it is important to note that Bitcoin operates within a larger economy, and its deflationary nature does not necessarily mean that the entire economy will become deflationary. This is because the supply of other goods and services in the economy is not limited in the same way that Bitcoin's supply is. Furthermore, Bitcoin's deflationary nature can actually be seen as a positive thing for the overall economy. This is because it incentivizes people to save and invest their money, rather than spend it immediately. This can lead to increased investment and economic growth over the long term. This means that even if the price of a single Bitcoin becomes very high, it can still be used for small transactions by using smaller denominations of Bitcoin, such as millibits or satoshis. You can buy a single satoshi. Overall, while Bitcoin is deflationary, it is important to recognize that it operates within a larger economy and its deflationary effects can be offset by other factors. The deflationary nature of Bitcoin can actually be seen as a positive thing for the overall economy. Bitcoin is an excellent inflation hedge due to its decentralization, deflationary monetary policy, store of value, borderless nature, censorship resistance, and growing acceptance as a means of payment. Its finite supply, deflationary nature, and growing adoption make it an excellent investment option for the future. Please consult a financial professional before making any financial decisions. Please, comment, like and subscribe.